Good afternoon, traders. Good morning if you're just waking up. Good evening or good night if you're in parts of Asia. Welcome to the proptrade.com. It's our Tuesday, 2nd of September 2025 live webinar, or trading account, call it what you will. We're looking at the data today. As you can see in the calendar next to me, here it's been a really so far quite an interesting day. Look at this core inflation from the CPI from EU area this morning, up at 2.3%. It hasn't cooled as was expected. 2.2 of 1% for August. This is the first reading, so it tends to be the most volatile. We've had some huge movements this morning, none more so than on some of the trades we've got open. Some of the trades, a couple of the trades from last night, the short yen positions, we were long pound yen, euro yen. Aussie was looking quite positive as well. Yes, I was speaking to a client on on our restream, sorry, on our Discord group about that. Hit target one and then it's reversed really aggressively. So another, great advice about moving your stop loss up to entry once your first target's been hit. So that's what happened this morning. Otherwise, the indexes have turned around and we've been stopped out of our two long positions. Interestingly, my strategy last night gave me a potential short on on the Nasdaq 100. I overthought it. I didn't take it. Would have been very much in the money on that one, but that is trading for you, isn't it, my friend? So, say we'll have a look at the charts in a minute. Main news today is the ISM. This one here, the ISM Manufacturing PMI data. So it's the Institute of Service Manager and the Purchasing Managers Index. So it's these people that look for placing orders, what the future is going to look like. It's a sentiment indicator. It's a leading indicator. Anything on these PMI indicators under 50 shows that the sector is in contraction. So you can see this in manufacturing. It remains in contraction in the US. Um, as it does in many parts of the world, and prices continue to move higher. So 60 were 5.1 for prices and 49.0 is expected in 12 minutes' time. The Standard and Poor's Global Manufacturing PMI data is also out, and let me have a look at that. US stock markets opened about 20 minutes ago, and they're all in the red. Big move down. The S&P is down 1.2%. Nasdaq is down over 1.3%. Obviously, we had a long weekend yesterday in the United. Oh, so yeah, let me just take all some of these. Let me put the filters in. It's dropped all my filters out, so I'll select all of those and just get these two majors. And we just look at today. Too much else going on. There we are. So Tuesday, the 2nd of September, the S&P PMI has less impact than the ISM number, but again, it's missed. But it is positive, so it's up significantly. Let's do the positive spin on it as the as the administration in Washington will be doing. So it's a positive spin for manufacturing. It's now back in an expansion mode from a contraction mode for months and months, years, in fact. 49.8 to 53. It's zero point 0.3 less than expected, but that's still a positive tick. That may lift the downward move we've had in the oops in the so if I got it on it's the hourly. This is you can see this is I'm saying bad enough. 8 o'clock candle is very key for me this morning. The opening of the European trade. So let's say anyway more on our actual open trades in a minute. I was nearly, as I said to you yesterday, I was thinking about taking these out. We'd got to this new all-time high here. On the 28th over 6,500, and we've basically sold off ever since, and sold off very aggressively as well. I held on and gave up, proper gains. It was, my target was no, it wasn't off the charts, so it was over here 65.50. I thought the rent, it looked like we were moving on, but we'd been down to this stop loss level where the stop loss level was. Moved up to yesterday. I think it was only yesterday. It might have been, it's only Monday, wasn't it? So yesterday. But anyway, it's a losing position. Same on the Dow. I'll update the channel in a wee while. Guys, if there's anything you want to have a look at, any particular assets you want to trade, let me know. Let me just make myself a wee bit smaller. There we are. Hope you can hear me clearly enough. So that's the S&P 500 through its stop loss. Let's just do this while we're here before the data comes out. The Dow was also stop loss was hit at 8 o'clock here. In fact, it got out earlier than this, but this is the hourly chart, the 15-minute chart, which is what I was looking at earlier. There was a bigger tick at the 8 o'clock open. I didn't actually get out there. I got stopped here around about this during this candle here. So it's not as bad as it looks there, but it's still quite significant. 200 point, maybe 300 point loss there on the S&P 500. Points wise, obviously that's massive, and obviously if you trade in forex, it's nothing like that points wise. But percentage wise, again, that's what it's all about. So percentages is still a similar sort of 1% loss on that one. I think it was 1.87 or 1.88 or something on the Dow, and a little bit less on the S&P 500. It's a 15-minute chart. This is what I do each morning as I get up around about, sort of look at things around about 7 o'clock, see where we're going. We were down again. It was that, and really, I'd left it initially, and then the 8 o'clock candle, I was around for the European Open as ever, and then it just went really negative after after the um, first 20 minutes or so. So we got out here at this candle here on a little bit above where the actual stop loss was this morning. It felt a bit panicky, but the trend had been very significant from that all-time high, over 6,500, certainly for the S&P 500. Anyway, let's just go back to the calendar and what we've got coming out. So, manufacturing PMI is better than expected. We'll see what the more important, as I say, ISM looks like in a minute. So, stocks selling off. Let's just go back to the hourly time frame. Stocks selling off. There's the Dow across here in Europe. The DAX is also down today. That's that trend that we were talking about yesterday's open. So that was Friday's high pre-market yesterday, and obviously there's that big 8 o'clock candle this morning, which breached. Well, it took us way below our 24,000 sort of supportish pivot area from yesterday, and big move down. We'd already moved lower this morning, so we were short that on the opening trades this morning. So that scalping strategy has worked out really well today. But obviously the end of day stuff's being hit. So big move down through Friday's low. And again, if we just go back to the daily time, it was very, as you can see here, the 4-week trend, 4-hour trend from last week, which is what we were using yesterday. Go back to the 4-hour trend, downtrend from last week. It's been exaggerated. So the moves, look at these really strong candles. This is due to close in 5 minutes. So we got a very strong three black crows or three crows downwards, where that's a candle pattern where we have three candles, the bodies of the candles, similar sizes, which we've got here on this 4-hour time frame here on the DAX. So that's suggesting more weakness to come. What will scare people out quite often with these moves is that because it's moved so aggressively in these like 4-hour hourly time frames, it's already moved a long way. So people sort of get panicked. You can see here the RSI has moved into an overbought situation. The MACD signal line crossed all back here last week before, but it's moved down, rallied up a bit yesterday, and then it's crunched down today. Now that the US market's back, remember what I've been saying for weeks now. Today marks the start of the final run into the end of the year, the final 4 months of the year. It's the final month of the third quarter as well. Just September and October can be particularly volatile. It's been driven by the expectation that the Fed rates in September, and also the major driver is the very steep steepening of the yield curve. More on that in a minute there, but the yield curve certainly very, very steep. We've got a 30-year high in the UK, a 30-year yields in the UK has got to a 30-year high, and that's to do with the politics that's been going on the last couple of days here in the UK. But more on that in a minute as well. So basically, stop lower. That's the DAX, the FTSE. Very similar pattern as you might expect there. can see here on the 4-hour time frame, there's the same downtrend, the 20 period, keeping you the right side of the move. Some big negative candles, not so big green candles. So the trend continues to move down. The first break was here back on the 26th. There on the 4-hour time, we retraced. We didn't get back over 3,000, 9,300. These are all-time highs up here for the FTSE. It's had a really, really good run in the summer, and now it's hit September with a bang, and we're back down to test the 9,100 level, which we've been over since his first breach here at the end of July. So, uh, um, held over most of the time. Not strictly true, is it? 9,100, but certainly the 9,000 level was a big line in the sand, and we've been over that since the 22nd of July. So 9,100 next test support zone for the FTSE, but that remains to the short, a bit like long on gold remains to the upside. So that's the FTSE. Data is due in 5 minutes. So I'll quick look at the indexes. The euro now at 116.50. A move down earlier today. It's bounced. It looked like we were inevitably heading for 116. We didn't. We bounced up to 116.15 so far today. But again, that remains weak. The 4-hour way under its 20 and 50 period moving average. It needs to get back over 1660 for this to go long. So the dollar's having a strong day today, strongest day for a long time. Then you can say there's a bounce from 16, 15 in the last hour or so. But, again, we are still negative here on the hourly chart. 116.75 needs to breach to the upside for this to start to look long as we had been yesterday and most of this morning until again there we are, that 8 o'clock candle, which really shook things up this morning on the European Open, knowing that the US was back. We just take this up to the daily time frame. You can see we're chopping around quite significantly. The euro can't breach and hold 117. It doesn't want to go under 116 for August. Yeah, we did move above it here at the beginning after the first week of August. We held it, but we couldn't breach 117. So 116, as we saw there on the intraday chart, quite key for the euro. So the dollar's having a good day today. Can it hold? Dollar yen, 148.40. The data is just due. We'll go back to the euro, the short time frame. But again, dollar yen doesn't want to move below 147. Um, and to the upside. So, yeah, in a week data there, as we saw on that euro and pound chart, here against the dollar, we're at 148.40, so back through 148 as well. And just resistance area at the moment. Just see how that daily candle closes for dollar yen. We had a major upgrade of the feeds and our liquidity feeds and the system over the weekend. So that's why some of these charts are a bit disjointed, on these higher time frames. Cable 133.40 at the moment. Again, big down day. And again, lots of news pouring out of the UK. As I said earlier, we've had a record 30-year high in the 30-year yield in the UK. And some political changes. The Prime Minister, Sir Keir Starmer, has brought into his reshuffled his people in the 10, the actual where he resides and where the policies are put together. He's poached somebody from the Treasury, which is putting even more pressure. Well, that's how the marketing interpreted it. Even more pressure on Rachel Reeves, the pressurised chancellor. She's got a very important budget coming up next month, and obviously markets are now anticipating that perhaps she won't still be having a job. Even though Sir Keir Starmer backed her not just only a month or so ago. So the dash for growth hasn't happened in the UK. The data is still relatively moribund. If we just go back to yesterday's PMI data for Europe, you can see the UK data, the manufacturing one, was one of the worst. In fact, the worst in the European continent, extended European continent. 47 for manufacturing out of the UK yesterday from 48 last time, so it's going backwards. We saw significant improvement in other parts of Europe, edging into an expansive state here in France and Italy. And best of all was the Spain data tomorrow. But interestingly, two the bigger economies, Germany was still in contraction, more or less in line with expectations of 49.8, and the UK. Um, the laggard there on the manufacturing PMIs, but services wise, it's doing much better. But it's still not good enough. It's still very moribund, the UK economy. So pressure again on the Bank of England, perhaps to act again at their next meeting as well. So there we go. The data has just dropped. It's coming at 43.8 for the employment. The headline PMI, a bit like the S&P, better than last month, not as significantly better as the Standard and Poor's reading of it, but 48.7. So it's missed by zero point 0.3 of one ticks. Prices are also not as bad as expected. So again, the and actually better than last month. So the administration, Trump's administration, will take heart on that. Not obviously actually on the PMI data itself, but the prices not as hot as expected. But hence this focus about jobs. Obviously, tomorrow's key. We got the ADP and non-farm. Tomorrow we got ADP and the weekly services, and that huge revision we got over the last 3 months for non-farm payroll last time, where we saw the head of the Bureau of Labour Statistics getting terminated very quickly. The ADP numbers, which have been out of favour and very much criticised over the last few years, coming a little bit more back into favour, and also suggesting a bit more correlation with the actual non-farm payroll data that comes out the following Friday. As you can see, tomorrow we've got. Tomorrow this is later. Tomorrow's the JOLTS numbers. Yes, sorry, it's Wednesday, isn't it? I'm getting ahead of myself. The JOLTS numbers tomorrow, Wednesday. I thought we were services PMIs in Europe, and then on. I don't know if I can go. Let's do it all the week. Thursday is the ADP numbers. They're normally out on Wednesday. It's because of the holiday. So Thursday sees the ADP numbers. Where's ADP? Gone. ADP numbers here. Around about 70,000 for non-farm. ADP. And now if we go forward to Friday, the non-farm payroll now is also around about that 74,000. This time last week, the first reading I saw from both Reuters and Bloomberg was around about 86,000. So we've come down. But remember, we've had these massive revisions. So I was just looking at some data from the last 3 months, and it's an average of only 35,000 new jobs over the last 3 months. That's the last 3 month average out of the US. So it's come down very significantly. Next week sees the annual payroll survey as well. I think it's next Tuesday or next Wednesday. And that's been coming down over the year. So that's the actual numbers. So that would be quite key next week as well. Obviously, this month's number, as it's August. August is always quite notoriously all over the place because of the seasonality of it all. Seasonal workers, some being recruited, some being terminated, and the weather can have quite a big impact on the August numbers as well. So there's a lot of nonsense sometimes in the August numbers, and it is the most volatile and gets revised. It has been revised both positively and negatively over the past. So obviously it's the last major reading before the Fed meet on the 17th of September. They'll take the caveat of it being the August number, but obviously we got CPI for September, middle of September, ahead of the meeting on the 17th and 18th, 16th and 17th, and obviously ahead of the PCE number that comes at the end of the month. And obviously last Friday, the PCE number was very benign, so hence this focus on the jobs numbers. So unemployment rate, the U6, could it go back over 8%? The more important headline, U3 reading at 4.3%, and obviously the participation rate, all key on Friday, but more on that on Friday. As far as today's concerned, Dollar remains strong. It's weakened on the that PMI data, as you might expect. Look at the euro, and we've just gone back down to the 5 minute chart since the major data count. So sorry, there was the 45. Sorry, the 1445. That was the Standard and Poor's PMI reading. Uh, moved down initially, but then sorry, the dollar moved up initially, and since then it's weakened. So euro up from 116.47 to 116.64, having on a weekday. But again, trade what you see, not what you think. We've been short all day. A bit of a retrace that didn't work out. We went short here again. Lower the day at 116. In fact, it was. I was talking about 116.15 on the high time frame. Here on the 5 minute, we got to 116.13. We ticked higher here at 5 minutes past two, and it remains long from there. And trailing our stop loss up behind. We've gone back through that last peak, which is quite positive on the data. So dollar's weakened on the PMI data, and that's expectations that more expectations that the Fed are going to act later this month. And if we look at the Fed Watch tool, the free one, remember this is take it with not a pinch of salt, but the caveat is it's a free tool. But here we are for a chance of a rate cut on the 17th, just over 2 weeks away now. 89.7%. It's the highest it's been for a while. When it first started to rally up about a month ago, so 89.6. So that's nailed on. It was 84, I think, earlier in yesterday or earlier in the week. Actually, no, it tells me that it was 86, 87 a week ago. I think it dropped below this, and I think it's come back up to where we are. So that's the September number. If we skip forward to October, remember October is another good 6 weeks. So it's right at the end of the month, October the 29th. But the likelihood of another rate cut then is now around 50-50. So this is where we are currently at 425, 450, 4.5 to 4.25 to 4.5. And so a whole 50 basis points lower. There's a 50% chance of that by the end of October. So this idea, which to be fair, the Fed, they've always been talking about two cuts before the end of the year. That's been the consensus view. Obviously, it's moved around a lot. People saying it wasn't going to happen. We weren't going to get any. So things moved quite quickly. The other key thing, so that's looking forward. The other key thing today, after these PMI data, is obviously got JOLTS and I say ADP Wednesday and Thursday. We have a short, sort of short notice schedule of Trump speaking. It's not clear what he's saying. It'll be obviously the press will be there, his mouthpieces later on. So watch that. This is scheduled for 8 o'clock GMT, 4 hours away. Still 7 o'clock my time here, and 9 o'clock Eastern European time. Eastern East Europe summertime. So see what Trump's got to say later on as well. But that is a weak reading for the employment data, hence the weakening of the dollar. But interestingly, that also weakness in further suggesting perhaps weakness in inflation with the prices not going up as much as expected and less than last month. That's just that's quite an interesting take on that. See what we say. I'll just the chair is being interviewed at the moment on the chair of the ISM Manufacturing PMI chair. Susan Spence is being interviewed as I speak on Bloomberg now, so she obviously talk with much more detail and gravitas than I can about her own numbers. But anyway, the point is the dollar's weakened and we continue to weaken. So we're trailing our stop loss up if we were taking this trade long here at 5 minutes past 4 when we had that trigger on that particular strategy. So dollars are weakened across the board. Indices might have come back a tad. Let's have a quick look. Start with the most important, which is the S&P. S&P here in the 5 minute. Yeah, indeed, it's yeah, come back there on the initial reading there at from the Standard and Poor's. The 3 o'clock reading took us high, but then we've rolled back down again here. Um, so again, if you'd taken that long, it's not what's doing down here, going very much against the trend, so be careful. But that's the level to look at today. Our low today has took us to 6,370. If I just, I'm going to put that in there just for my own uh, interest. Oops. Horizontal rate and see where that takes me back to. That's a low. That's the That was the opening low, wasn't it? That's yeah. So that's our opening 5 minutes. You can see there the US stock markets, the cash markets open at 14:30 here on my time frame there, and that was the opening low. So that's the low of the day so far. Doesn't mean it's going to be the low of the day at the close, but if we just take this up some time frames, you can see what a significant move down. Whoops, we've had. So from this breach of 6,500 here last week. It's been a big old turnaround on Friday ahead of the weekend, the long weekend. That looked like profit taking, but the key move today here on the daily chart is the fact that we are now under and significantly under, as we couldn't trade around here at 6,400. Significantly under the 20-day moving average. And because of the update on our feed, I can't take the data any further back. Hopefully, it might update um, later on, but that's looking quite weak and potential short positions from that. But you can see here, just the last big move we had under the 20-day was here at the beginning of August. It was bought on that surprise non-farm payroll on that Friday. It was immediately bought back on the Monday, and we rallied, retraced, and then rallied to 6,500 last Thursday. So yeah, volatility is back in play. So under 6,400 today, 6,405 at the moment here on our derivative chart for the S&P 500. Guys, if there's anything you want to have a look at, say do let me know. However, that's a bit being negative. We stopped out those two trades. We'll come to the yen trades later, but we have had a new all-time high today on both the futures and the cash market for gold. 3,500 is really the news of the day. This daily candle on gold. Our stop loss got dragged up again today. It's now at 3,462. I might pull that up even higher later on. Keep posted. So we're very much in the money, having lost on the indexes. We're very, very much in the money from gold on the gold trade from the 22nd. Was it 22nd or the? I can't remember when we actually. Yeah, 22nd is when we went long that Friday night on gold. Back here it is. In fact, there it is. I don't know that. It must be an intraday one, that horizontal line. But target one seems a long way away. We took 50% off at target one. We've moved up higher quite nicely. I haven't actually added to this position, could have easily added and probably should have done as that rally has happened. But obviously, as we had with S&P 500, buyer beware, guys. Remember, because we got this huge new all-time high as we got with S&P. Is the gold market going to repeat what the S&P did and sell off quite aggressively? It can do, just as it's rallied up very, very quickly. So be aware. Keep the stop loss not too close, but trailing the trend as it moves higher. As you can see, the 24-hour moving average is now here at 3,456. I've moved mine up to 346. I think that was the 1 hour 50 when I moved it earlier. I did move it earlier, didn't I? Yeah, there we are. It was just around here. Um, so that's why we're at for 3462, locking in lots and lots of points and pips. Looks even more impressive than the stock market sell off. But again, it's all about percentages. So the percentage gain is obviously significant as we continue to rally. So that's what it's all about. What percentage have you made of your account? That's how we measure you here at theproptrade.com. That's how you should be measuring your success as a whole, not just on one particular trade. So never get uh, pulled down by losing trades, never get too elated by winning trades. And just as we're talking about trades, we just look at the two other trades we took last night, euro yen, and how things can turn around really, really quickly. So euro yen um, from last night, our entry here moved off quite nicely overnight. I got up this morning, we'd already hit target one, so the stop loss, it's not here on this one, but the stop loss then gets moved up as with the gold trade there to around about the 50 moving average, happens to be entry, and that's still in play and that's still holding on to gain. So I should move that here as well. Again, I'll update everybody. So that's up there at stop loss. So we can't lose on the second half of the trade. So I think it's 40 or 50 pips we've made already. It has been higher. We went over 173, 173.40, and we're still testing 173 here. So that's bid. So the euro's up. Uh, the one that turned around really aggressive, and this again, why we need to on the 8 o'clock, as I said earlier, the 8 o'clock candle. But we'd already hit target, went through that 200 level. Again, these big round numbers coming into play for dollar yen this morning. Weakness of yen yesterday continued into the early hours, and then this was weak. This was all to do with the worries about sterling. And look at this; it's if I hadn't have moved the stop loss, it would have reversed to it really, really quickly. But we'd moved this up. Um, when I woke up this morning, was checking this at 7 o'clock, moved the stop loss up on my trading platform. Oh shit, that's what happened. We moved it there, and so the second half of I wasn't really expecting that, given the euro didn't reverse. The second half of that guppy trade, the pound yen, was stopped out, so we've made half of the total overall gain. But that's how I trade my position. If you've got any questions about that, ask me on WhatsApp. So I'll update, not WhatsApp, on Discord. I'll update the Discord group later on as well. Other trades yesterday have also been hit. Again, acted at around about as things were kicking off on that 8 o'clock candle. So the other one we went long on yesterday was pound Swiss. So again, a similar move here, except it was the other way around. So we got in here last night. My actual system, I'm not saying making this as an excuse. My actual system didn't actually plot the trade at the close of the candle, so I'd got in a bit earlier last night. It looked like it was going to happen, and it hasn't registered as a trade on my system, but I'd already placed this with you guys. So stop loss was hit in that 8 o'clock candle. But again, what I do, I look at the 15-minute candle on particularly the ones where I say, also they're the ones that are a bit more risky. So if we look at the trading strategy, so these were standard day trades, but again, I still manage them when I get up in the morning. And as it says here, also to be checked early tomorrow morning. So around about 7 o'clock, 7:30, I'm deciding whether I'm going to keep these open or not. But these are really good examples of uh, why I do that. So this is the hour. Sorry, this is a 15-minute time frame. So the 8 o'clock open for the cash trades, the cash market in the UK, caused this huge. So look what happened overnight. Nothing. It's a miserable sort of. It was right. It was a strong rally up yesterday. I'd say we got in here around about 9 o'clock. Went against it initially overnight. Now it was just going sideways, but this was massive here. So the first 50 minutes. So although the stop loss was here, I haven't updated, and I tried to update the Discord group. Although stop loss there was 107.80, I closed this out as this was coming down really aggressive. I waited till the 15 minutes was up. But normally I'm looking at it at sort of 7:37, and normally I'd have just left it. But I was around for the open, and down we went very aggressively. 108.0, I think 108.10. I think I was closed out on my system. But anyway, so the FTSE's yeah, down 1.6% now on the DAX. Just flashing up on the Bloomberg terminal. So that was closed out there ahead of the stop loss because the momentum here on the 15-minute was with us. And similar, and these are for the ones, particularly the ones that say also here. So these are the more aggressive. This is also, these are the more aggressive end of day charts. These are the stand. This is standard system. This is the more aggressive one. So Euro CAD is a similar um, 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 situation. Euro CAD. So let's just go back to the daily. So this is the so it went long yesterday. I haven't I had a strong day yesterday. We got filled at 9 o'clock around about here. So we'd had a strong day, come back a bit. We went long here, looking for 161.31. But again, you can see here the 8 o'clock candle, big heave ho. So that was again another one that was closed out on the 8:15. Oh, where have we gone? On the 8:15 candle. In fact, it was that one there. That was it was enough. I think I got filled between these two prices. I can't actually got the trading platform, but it's obviously gone back since then. But it doesn't matter. We're out. We went crashing right through our stop loss, but we got out around about. I think it was somewhere around almost. Obviously, the spread euro. Some of that euro CAD can be a bit heavier than the majors, but. Yeah, I think it was one oh six, 70, 60 something, 60, 68, 69. I can't remember. It was around about here, so it was ahead of where the actual stop loss is plotted there at 657 dot 657. Yeah, so as I say, that is trading. Some losers, some winners, and the big winner is still open on the gold trade. So far today, I'll just check my. I can open. Here, see what's looking for potential trades tonight. Those of you who trade with me as on end of day basis. The main system has a euro Swiss and a euro pound, and cable. Looks like cable's going short on the main system tonight. Yeah, big old, big old time candle obviously today. So we'll have a look at that later on. The more aggressive system at the moment, a bit more opportunity. Euro Aussie, Euro Kiwi, again cable, the Kiwi, New Zealand dollar, and New Zealand CAD as well. So the dollar having a good day. It's triggering these end of day potential positions on the Kiwi, the CAD, and certainly sterling. Sterling having a weak day, dollar having a better day across the board. But anyway, so we still got our gold trade that's open and in the money, and it's certainly percentage-wise, it's doing very well. It's not going to bring back all the losses on the indexes, obviously, because remember I report them as numbers. But let's just leave it with the um, oh, no, that's fine. Oh, there it is. Stop like I was 15 minutes. That's why I thought I'd lost that as well. But this is the 4 hour chart for gold, and our stop loss now is above the 20 period moving average on a 4 hour. May drag it up a wee bit tighter as this rally seems to want to have another go at 3,500, but it will come off that potentially quite positive, quite aggressively. But we remain overbought in the RSI, so watch that. The MACD signal light are looking to potentially cross. They may get close and bounce off, but the momentum is with us. The ATR is rising. Here. So there's the buyers trend is certainly moving. Remember, ATR doesn't give you direction just because that's going up and the trend is going up. You can't read that into it. This is suggesting that the distance the candles are traveling is increasing. So that's again suggesting it's in line with the moment, the direction of the trend. That's can be very positive as well. But all-time highs again. We have now, as I'm speaking, we're now breaching 3,500 again on the gold chart. So there we go for Tuesday, the 2nd of September. The US is back after the long Labor Day holiday. Volumes are back. Liquidity is back. This is the big start of the big run in. And what have we done? We've had I'm saying knee jerk. We've had a reaction in the stock market, which is probably healthy. It's probably, let's just do the DAX. It's not the DAX, the NASDAQ. because we've had such a tremendous run on the stock markets. But a big shakeout on Thursday and a big shakeout here on Tuesday as well. 23,165 here, the Nasdaq. So the Nasdaq's down over 1.3% as well today. Nasdaq 100 more. So as nice as my chart did. It's, I think that the data just got lost because of the update. Yes, the weekly has only taken us back to July, which is no good, is it? Um, you know, sort out that. I'm sure we will. And the powers that be will get on top of that. So a big move down there. If we can come down to the hourly and the 4 hour and see the rate of decline is sort of sped up, if anything. So we had this major move higher here last week on Thursday and moved down on Friday. We went sideways yesterday with no, obviously, cash market open. The derivative market slid sideways, and then a big explosion of selling today to the downside. We've been as low again as 22,985, so under 23,000 for the S&P 500 today, and the trend is very much to the downside. So if there's no more questions, guys, I'm going to wrap this up. We've finished with Billy Bitcoin, which has bounced a wee bit today from those 108,000 levels we saw yesterday, and the 106 level, sorry, 107,000 it was, wasn't it? Yeah, so we are up along with the stronger dollar. Crypto's lumped up here in today from lows this morning. So can we get back and hold 112,000? The trend remains, you can argue, to the downside, but this is quite a strong candle at the moment. And the last big one was also a buyer at this 107,000. So has the decline paused? Probably a little bit too early to actually tell us that, because the 20-day moving average still sits above the key 112,000, 112,500. So first we need to recoup 112,000 and then that 20-day moving average. Otherwise, the trend down is still set, and it still looks like that's set because the recovery has been quite weak. Good day today at the moment, but if we don't get back over 112 and get rid of this sell-off from last week on Friday, it's still looking quite weak. As I say, the 20-day moving average is 112,500 on Bitcoin. So the trend remains to the downside, and target remains to the downside here. If we breach 107 very quickly, 106, 105, and then the number at 100 might just give way very quickly on Bitcoin at the moment. So trend remains to the downside. Take care, my friends. I'll be back tomorrow. Tomorrow's Wednesday. We'll do some live trading for the European Open tomorrow. After that, tomorrow we got a slew of services PMIs. Remember, services is much more important than manufacturing. Manufacturing more symbolic than anything. To be honest, obviously people like to be countries from the to make things. Don't get me wrong, but certainly from a GDP point of view, from a productivity point of view, and from a developed nations point of view, these big industrialized countries and all of the middle income countries as well, services is the key driver. Job also later on today, remember these job openings and the churn, people, how many people are moving from job to job, and a speech by Kashkari as well later tomorrow night as well, and the weekly oil inventories, the private ones tomorrow, the official ones on Thursday, along with ADP, and the weekly jobs claims and services PMIs out of the United States Thursday key day ahead of non-farm payrolls on Friday. So busy day to start, busy week obviously to start the new month as ever, led by PMIs and non-farm payrolls to round things out. So take care, be good. Be safe. If you're not with us, come and join us. Our evaluation products are very straightforward, very clear, very open. Lots of people giving us lots of positive feedback on our different sites. If you just want a one-step challenge, the Express is a one-phase approach. If you're new to us, new 25 gives you a 25% discount. I was thinking the boss is smart this morning about this. These prices are really, really good anyway. If you want to call yourself a trader, you want a $25,000 account to get an investment of less than $200 to allow you to trade a $25,000 account is just fantastic value. If you're then getting 25% off that rate, takes it to $130. I'd be pulling your arm off because prop trading, and the prop trade in particular, fits in with my style of trading. An end of day trader. I trade very conservatively. I always focus on my losses. I let the profits take care of themselves. And so, maximum daily loss 7% for me. Sorry, maximum daily loss 4% for me per day. It's just massive. It's just out of the question. I'd have stopped. Funded accounts can be achieved by any type of trader, but certainly the end of day guy certainly works well. Obviously, scalping works well because you take the risk off the table at the end of the day. I'm not a news trader; it doesn't really bother me. I mean, it's too much noise, too much volatility. People get dragged into it, get pulled into that gambling mindset. It's not for me, but it is for you. If you want to trade the news, you need to pay a little bit more and take a pro account, not a standard account. But sorry. Trading news trade is allowed. I was on the standard, but the Express and the Pro accounts, just a standard account, which is a wee bit cheaper, is not allowed. So as I say, anyway, 25% discount if you're a new. If you've already used that coupon, try Discord. You don't get as big a discount, but we uh, Discord 20. Obviously, you need to have a. Whoops, can't type is the problem. Discord 20 gets you a 20% discount. It's because I can't spell. I don't spell Discord like that. You fool. Gets you a 20% discount, so $35 off the $175, $140 for as many accounts as you want. Occasionally we do bigger discounts, as we had last week, closing out August. So anyway, there we go. Any questions? Get on our get Discord downloaded, my friends. Chat that. That's where I put all my end of day trades. Um, Rondell is interacting with me here on not this little group here, the trade and strategies. But feel free. All the questions here. The support team, fantastic. Johnson, Thompson, and Katzen, very quick to get responses to you. So here to help, my friends. Okay, take care. Be good. I'll see you all tomorrow for the European Open. So what we'll be doing today, we'll be plotting where that DAX low is of the day. There we are. We've just our low here into this 23,500 range. Yesterday we were talking about the 24,000 area being the key support, and we rallied quite nicely yesterday from the open, but huge sell off today when the Americans are back trading the markets. As I say, big volumes kicked in today, and it was negative. It was price sensitive stuff. All the worry is, is about the yield curve, that 30-year yield curve, and the steepening of the difference between the short end and the long end, worrying markets. So see what Mr. Trump has to say later on as well today. Take care, my friends. See you soon. Be good. All the best.